Hey Money Movers, welcome back to Millennial Money Moves with Nadia. Before we get started, please go ahead and hit the like button, subscribe button, and turn on that notification bell. Today, I'm going to be giving investing tips for beginners. Now, the reason I'm doing this video now is because we're seeing the way that the market is looking right now. You know, even people who don't already invest in the stock market, now might be a good time for you to get in if you've never invested. So let's get started. Number one is you're going to want to start with companies that you're already familiar with. You know, start with what you know. Just a tip in life. And what I mean by that is, what's the company? Do you understand it? Do you understand what they're selling or how their technology works? How familiar are you with it? Like, Apple. If you have an iPhone, I'm sure you're familiar with Apple and the products that they sell. I mean, that was one of my first ones. I use a Mac, I have my iPhone that I'm filming on. Very familiar with Apple and how they're making money. The second thing you're going to want to look at once you know, so let's get started.
So Nadia, what's up?
We making money moves.
Who making money moves?
We making money moves.
You making money moves?
We making money moves.
We making money moves.
We making money. Number one is you're going to want to start with companies that you're already familiar with. You know, start with what you know. Just a tip in life. And what I mean by that is, what's the company? Do you understand it? Do you understand what they're selling or how their technology works? How familiar are you with it? Like, Apple. If you have an iPhone, I'm sure you're familiar with Apple and the products that they sell. I mean, that was one of my first ones. I use a Mac, I have my iPhone that I'm filming on. Very familiar with Apple and how they're making money. The second thing you're going to want to look at once you've kind of picked a company that you're familiar with is how they've performed historically. And you want to compare it to companies in the overall market and also in that specific sector. So, let's go with the Apple example again. If you're investing in Apple, maybe you want to look at other tech companies, compare it. Are they performing well? Like in the market, is the market down? So they're down. Maybe the market's down 20% and Apple is only down 10%. So maybe they did really well in a market that's really bad. And how does it compare to their competitors? Always want to, keep an eye out on the competition. Now this one is just probably the easiest tip to remember, but hardest to practice. Buy low and sell high. Now the reason I say that's hard to practice is because when people see a stock price start to drop, they often do what's called panic selling, and they just sell off everything they have because they're, scared that it's not a good investment. But, there are instances where you should sell. But that's rare. If you like a company and you have a good pick and they have good fundamentals, if nothing in the company has truly changed, then I would say it's still a good investment. Wait and see and don't panic sell. But in the case that it is just a bad investment, take your money out before it's too late. But ideally, buy low, sell high. When you're doing your research, you want to use reliable websites. Trust the source. I like to use Yahoo Finance, TipRanks. What else do I use? Seeking Alpha. Those all kind of help break down news to me. And I'm pretty active on Twitter now with who I follow for news updates. I like Bloomberg. That's another great way to get, information about a company and what's happening. They'll tell you. When you invest, you want to look at, I don't want to get too ahead of myself for those of you who are just starting, but when I talk about looking at things, the fundamentals of a company, it's because I do a fundamental analysis. So that means I'm looking at their earnings reports, I'm looking at how they're doing in the market, I'm looking at their historic performance, and it's really a lot of psychology more than it is technical analysis. And that's going to be when you see people reading charts and they're going to talk about what's called the Greeks, so Greek letters and trends in charts. I don't do that. I am starting to learn about it because I think it's interesting and also useful. There's nothing wrong with technical analysis. I love it, especially if you're a day trader. You're probably going to want to use that. But I use fundamental analysis because I'm a long-term investor. One other thing I wanted to point out was, please don't forget about your capital gains tax. A lot of people just did taxes. And one thing that I think is important to note, if you're invested in a stock for less than a year, you're gonna have to pay a higher capital gains tax than if you hold the stock for over a year. The reason I brought up psychology earlier is because, I mean, a lot of just finance in general has to do with psychology and behaviors and how you grew up with money, you know. Everything in life kind of traces back to your inner child, and it applies to finance too. If you didn't grow up with money, maybe you're more hesitant to invest because you're scared of losing that money. A lot of people who grew up not having money are scared that if they spend that money or do something a little risky with it, that, you know, they'll lose that money and it won't come back to them. But don't let fear hold you back from investing. That's probably the number one mistake I see, is people just not doing it because they're scared that they're going to lose all their money. It's not gambling. It's not like going to Vegas and playing blackjack. It's not like that at all. There are also ways to make safer investments. But if you don't invest at all, that's the biggest gamble of all, because you're really losing money at that point. Because the interest you get from a savings account is never ever going to beat the market. You need compounded interest at a much higher rate in order to beat inflation. And unfortunately, keeping your money sitting in a bank is just not going to give you what you think it's going to give you. That APY in a savings account is trash. Like, it's absolutely nothing. And that's something that I wish I understood as a child. You know, when I was a kid, I had a savings account. My parents would give me an allowance, and I would just save that money all in a savings account. And I wish I had invested as a kid. But it's not too late. If you haven't started investing yet, don't feel discouraged like, oh, well, I didn't start as a kid, so it's too late. No, I didn't start as a kid either. I'm young, but I'm not a child. So it's never too late for you to start investing. You definitely want to manage your emotions. And that might, again, sound unrelated. You can be wondering why I'm talking so much about mindset, but that's a large part of investing. You know, a lot of people spend time either watching the markets too obsessively, especially in times like now, and or panic selling. So right now, everything is dropping, and I think it's going to keep on dropping. So, you know, if you're looking for a chance to buy in the dip, I don't think we've seen the bottom yet. So you might want to just save up some more cash and wait a little bit. You know, patience is virtue, but not getting too emotional because you're not making money as soon as you wanted to. Long-term investing could take a year, 5 years, 10 years to see really good return that you want. Sometimes it happens shorter than that, but right now you're probably not going to see that in this kind of market. But there are still companies that I really like that I'm not pulling out of. I'm waiting for what I think is going to be the bottom. You never know. Again, no one has a magic crystal ball, and I'm not a financial advisor. This is just what I am doing. But that being said, there are still things that I want to buy more of down the line. And you don't want to look at the stocks every 2 seconds just because it goes up and down. It literally will change within seconds, within minutes, and that's just not healthy. It's like that saying, you know, watched pot never boils. Sometimes you have to walk away from it and then come back, and you'll have a lot more peace of mind, not just staring and waiting and waiting. Another big tip, you want to diversify. The reason you want to diversify is because, I mean, it's the same as the saying, don't ever put all of your eggs in one basket. You drop that basket, eggs are cracked, you're done. Same thing with stocks. If you are invested only in tech and then something happens to tech and all of tech is falling, I mean, I use tech as an example because I saw that when I was investing, and that was kind of my cue of, oh, let me diversify a little bit, because I had the majority of my money in tech. I still love tech, but I'm invested in other things now. I'm invested in crypto. I'm invested in REITs. That's a real estate investment trust. For those of you who don't know, I'm invested in dividend stocks. And so those kinds of things are important. And if you're curious as to what all those things are, go check out some of my old videos, because I have explained in detail what REITs are and even about diversification. You know, I've really touched on the importance of all of those things and ways you can diversify. Also, since I'm on the topic, I want to bring up cryptocurrency. For those of you who are kind of like all into crypto, I hope that now seeing the way that everything is falling is kind of a wake-up call as to why you need to be invested in other asset classes. like I said, never put all of your eggs in one basket. You don't want to only be in crypto because, I mean, we're seeing lows right now that we haven't seen since 2020. You know, it's 2022, so that's a big deal. I still have faith in a lot of cryptocurrency, don't get me wrong, but be very careful. This is what I mean by, or me or other finance people you hear talking about, this is what we mean when we say crypto is very, very volatile. It can go up one day, you're making so much money, up one day and down the next, you know? So be careful and make sure you're investing in more stable investments like stocks or real estate. Real estate is also a good investment. Another tip I have is make sure you have emergency cash set aside before you start investing. Because what you don't want to do is be in a situation where you need some money and you're forced to take that money out of your investments before it was time. You know, you don't want to take a loss because you need some cash, and you also don't want to have to pay a higher tax because maybe you took it out in less than a year. You're going to pay a higher tax, and that's, you know, just not ideal for investing. Have money set aside in an emergency fund. I think a high yield savings account is a good place to keep money if you need to take cash out in case of an emergency. Just be careful. And my last tip is to always have an exit strategy. And by this I mean have a plan of when you think it's time to sell. You know, how long do you want to hold this for? Do you want to hold it for a year because you think in a year it'll be up 30%? Do you want to hold it for longer than that because you think, hey, down the line, I think this company is going to do some great things. Maybe we're not seeing it yet, but I think they'll have a lot of growth, you know, like your growth stocks. Maybe you have different strategies for different things. Another good tip that I want to give you guys for having an exit strategy is something called a trailing stop loss. I have a video on this if you want to, you know, learn about what that is and how to do it. It can stop you from losing money, and it's really, really beneficial. So go check out my video. I think it's called How to Use a Trailing Stop Loss. That's really helpful if you are a beginner. That was one of the first things I learned about, and it has helped me, especially for, I'm sure most of you work 9 to 5s. You can't be checking the market constantly. If you have a trailing stop loss, it kind of solves that problem of needing to be staring at your phone or staring at your brokerage accounts on your laptop. That was all I had for you guys today. I really hope that helped. I know I went kind of fast, so you know, feel free. Please rewind, rewatch as needed. And don't forget to like, subscribe, and turn on that notification bell. I will be making a video soon on cryptocurrency and Terra Luna. I feel like I need to talk about that because people are asking, you know, do I think it's a buy? Do I think, you know, I should sell it? I'm not buying it, but I want to do a detailed explanation of why that is the case and share my crypto picks with you guys. So stay tuned for more, and remember, we're making money moves. Have a good one. Bye guys.